A new adjustment close to 12.3 shillings on average, announced on this quarter's electricity tariff, has seen those engaged in commercial production press for a new structure to enhance governance of power pricing.
To create some kind of hedge fund to smoothen any impacts that would come from rises in any increases in inflation, any adverse changes in the foreign exchange, or abrupt increases in fuel costs. The other alternative could be to agree on some kind of forward rate. So even if it's higher than the present exchange rate, that rate would create a certain level of predictability to players. Now the third could be what we would call capping. And capping, in my opinion, would be the best.
The Electricity Regulator Authority, in its fresh tariff structure, states that foreign exchange, fuel prices, and the power generation mix are factors behind the new rates.
What does it mean for the electricity consumer? And unfortunately, even in the electricity sector, as the exchange rate depreciates against the US dollar, the costs in the electricity sector also increase in shilling terms.
With the primary pricing structure of electricity supplied to the transmission unit pegged on dollars, there has been concern that producers have the commodity overpriced.
It was a struggle even for me as a Ugandan, a leading Ugandan, to get alliances, to deal with the government, to get the licenses, to eventually be able to put up a power plant. To raise the money to build this power plant. A megawatt costs about $1 million. To have capacity of $90 million, the banks never would believe you could do it.
It remains to be seen if indeed a policy shift in the cost per kilowatt of power produced would indeed translate to an appropriate tariff for the ordinary consumer. Reina Ojon, NTV Business.